Hello InvestNest friends. Today we'll dig a little deeper into stock market terminologies. Have you ever heard someone talk about investing in stocks, ETFs, or bonds, and felt a little confused? What is that? What do these terms mean? Don't worry. Today we're going to break it all down in a super simple way so that even a 10-year-old can understand. Ready? Let's dive in. Let's start with stocks. Imagine your favorite chocolate factory. Let's call it Choco Magic. Now, if Choco Magic wants to grow and make even more chocolate, they will need more money. To get that money, they can sell tiny pieces of their company to people like us. Those tiny pieces are called stocks. When you buy a stock, it's owning a small piece of Choco Magic factory. If the factory does well and sells lots of chocolate, the value of your stock will go up, and you will make more money. But if the factory doesn't do well, the value of your stock can go down too. It's a little like cheering for your favorite team. You want them to win. Next up, bonds. Bonds are a bit like a loan. Imagine your friend wants to borrow $10 to buy a new toy and promises to pay you back $12 in a week. That extra $2 is your reward for lending them the money. A bond works the same way. When big companies or governments need money, they sell bonds. If you buy a bond, you're lending them money, and they promise to pay you back later, plus a little extra as a thank you. Bonds are usually safer than stocks, but they don't grow as fast. It's like planting a tree that grows very slowly, but it's sturdy and reliable. Now let's talk about ETFs. That stands for exchange-traded funds. Don't let the big name scare you, it's actually pretty cool. Imagine you can't decide which ice cream flavor to buy. Instead of choosing just one, you buy a mixed box with lots of different flavors. That's what an ETF is like. An ETF is a big basket filled with different investments. Some stocks, some bonds, and maybe other things too. When you invest in an ETF, you own a little bit of everything in the basket. It's a great way to spread out your money so you don't put all your eggs in one basket. If one flavor or stock doesn't do well, the others can help balance things out. So why do people invest in stocks, bonds, or ETFs? The simple answer is to grow their money over time. It's like planting seeds. Some grow fast, some grow slow. But with patience, you'll end up with a bigger garden than you started with. But remember, investing also has risks. Some seeds might not grow at all. That's why it's important to learn and choose wisely. And never invest money you might need right away. Investing is for the long run. Let's quickly recap what we learned today. Stocks, owning a tiny piece of a company. Bonds, lending money to a company or government and getting paid back with interest. ETFs, a basket of investments, like a mixed box of ice cream flavors. Pretty simple, right? Investing can be fun and rewarding, but it's important to keep learning so you make smart choices. If you want to learn more, start by asking questions, reading books, or even playing fun investing games. And remember, it's okay to take small steps. Everyone starts somewhere. Thanks for watching and happy investing. For more investment learning videos, please like, subscribe, and share our InvestNest channel. Keep learning and growing.